How and why are you looking at international markets to appeal to foreign investors looking to access India?
Where I see the biggest opportunity for my firm is mainly in the offshore market. And the reason is, in simple words, is because foreigners investing in India is a much bigger market than Indians investing in India. And India as a country, my sense is in the next few years will emerge as a separate asset class rather than being just part of global emerging markets. So we are a, India mid-cap specialist. We are a boutique with a very highly specialized investment philosophy. And the way we manage money, I think it is relevant for sophisticated investors from international markets.
Is there anything else you'd like to add?
It's not that, investing in India is a new trend, but it's just a trend which is gaining momentum as per what I can see. If you see the early years, most investments into India came from global financial centers like, say, London or Hong Kong or Singapore or New York. And this was routed through funds maybe domiciled mainly in Mauritius or increasingly in Luxembourg or Singapore. But these were basically offshore funds investing into India. And in the recent past, what we've seen is that there are a lot of investors who are preferring onshore managers like us, because we've been in the market for 30 years. The second point is that any which way, if you're looking, there is a huge amount of return to be made in India by investing in the mid-caps. And by mid-caps, I don't mean the really small companies. Even if you look at a company which is 3 to 4 billion in market cap, in our experience, a lot of money in the last few years has been made by investing in the upper end of mid-cap or the smaller large caps. Because 3 to 4 billion or 5 billion is a reasonable size to enter, and a lot of these businesses have scaled dramatically.
And what's your strategy specifically for your international business?
Our large cap strategy has a track record of 13 years. Our mid cap strategy has a track record of about 8 years. So in the last 2 or 3 years, I took over as CEO in 2013, and in the last 3 years, what we've been able to do is to scale up from about 200 million in assets to more like 1.5 billion in assets in the domestic market itself. And this is largely by way of managing money for sophisticated investors in managed accounts. The other interesting part is that out of the 1.5 billion that my company manages, nearly 200 million is actually proprietary money. So my company's capital, promoters' capital, our entire proprietary money is within these strategies. So now what we have is a fantastic platform in the sense that we have track record, we have alignment of interest because our own prop money is invested, and we have a respectable scale to present ourselves as an India mid-cap boutique, which is about $1.5 billion under management. My own perception is that if we were to be 5, 10, 15 billion like a typical Indian asset manager which operates like a supermarket, then I don't think investors would see us as someone with a defined philosophy, because typically supermarkets don't tend to showcase that. So what we've been doing in the last 3 years is to build a very strong platform, have the right alignment of interest, have a respectable AUM to scale, AUM to showcase, just as a domestic boutique, not really as a full-scale supermarket AMC, because we clearly see ourselves as a specialized boutique and not as a full-scale AMC.
There's obviously a lot of volatility and risk at the moment in the markets. So why does your strategy make sense?
The last at least a decade or more, risk and volatility has been part of the game all through and through. But in this entire period, if you really just look back, the Indian market has delivered, right? If we see some of our own funds, our own strategies, in the last 10 years, our compounded annual growth rate in rupee terms is more like 22%. Even if I translate it into dollar terms, it'll be a respectable, high double-digit kind of number. So what happens is that, yes, risk and volatility is part of the game, but the way we invest, we try to look at companies with secular growth rates. Because in India, consumption, banking, financial services, insurance, non-banking financial services, autos, specifically two-wheelers. So there are a lot of sectors in India which have seen a secular growth.
Is there anything else you'd like to add?
The other thing to be kept in mind is that, we have now a seriously reformist kind of government. And, whatever you've seen in the last few years in India, last couple of years specifically in India, according to me, being close to the ground, I would call it a serious reform. Because the cleaning up of the banking system, holding, borrowers accountable for defaults, enforcement of the law. So I think a lot of things have changed in the last couple of years. And from that perspective, I think, like I already mentioned, India will stand out as an asset class in the next few years.
Ashish, what are some of the major challenges that you face for your business, and how are you tackling these?
One of my biggest challenges in the last few years has been more in the Indian market, which is that in India the market is dominated by what I call supermarkets.
Do you have any examples of this?
These are basically asset management companies, which are founded by banks, mortgage companies, industrial conglomerates, real estate companies, all across. Whereas Motilal Oswal is unique in the sense that it's the only Indian AMC which is an equity AMC founded by an equity house. Our only business is equities. We are not a diversified conglomerate really. We are only into equity research and broking. We are into equity asset management and private equity. This is bulk of what we do. So building the appreciation for a niche specialized house has been a significant challenge. And the way we've scaled up in the last 3 years is what has given me a lot of confidence that yes, there is appreciation for such a concept. And when we go out to offshore investors, in fact, the response there is more encouraging than what it has been in the local market. So this has been an interesting learning actually for me.
So Ashish, what's next for your platform?
As a second stage, we'll look to figure out whether our investors prefer Luxembourg or Singapore. So build the enabling structures. We've taken the first step by building Mauritius, but in the next year or so we'll build more enabling structures, and then we would like to reach out to institutions, basically fund of hedge funds, private banking or family office units. So not really the absolute top end of institutions, not really the universities and the endowment funds, but more the private banking and the family office kind of institutions.